The consumer price growth at home, which recently went below 3%, is likely to rebound, largely owing to oil price pressures. Hye-ryeon reports.
Concerns over rising food and oil prices continue to persist in South Korea as consumers prepare for the Korean Thanksgiving holiday in late September. According to a report released by the Bank of Korea on Monday, persistent heavy rain coupled with extreme heat in the country will likely contribute to price hikes for fresh produce. In July, the price of lettuce and spinach almost doubled, and prices for agricultural goods rose by 4.7% compared to the year before. While the overall on-year consumer price index growth fell to the 2% mark last month, the Ministry of Economy and Finance predicted on Sunday that it will jump back up to the 3% mark over the next 2 months. July's growth rate, measuring at 2.3%, was the lowest seen in over 2 years and came after 5 consecutive months of decline in the on-year increase. Eased inflation was largely attributed to weakening oil prices, but with oil prices rising for 7 weeks in a row in South Korea, this is expected to change. On average, gasoline prices stood at around $1.31 per litre last week, a large jump from $1.18 at the start of last month. This comes on the back of a resurgence in global oil prices, which have gone up since July, with prices for Brent crude oil jumping by around $10 per barrel during the July to August period, and prices in South Korea affected the 2 to 3 week delay. With the national holiday Chuseok at the end of September into October, the ministry expects high prices to persist with high demand, as consumers buy food and gifts for the holidays. Finance Minister Chu, however, stated in a National Assembly meeting last week that the inflation rate will drop to the 2% mark again following the holiday and maintain an average of some 2% until the end of the year. Hye-ryeon, Arirang News.